Okay, welcome. Stock market technical analysis. We're going to get into the charts today, Friday. I waited a couple hours just to see if anything was going to kind of play out. I don't see anything in the major indices that's changing. So as of right now, we'll start out here with triple Qs, looking at tech. Obviously, tech's been rallying. Tech was the market that corrected recently. So, we captured this correction, shorted Qs pretty much down to 297. I was looking for some more downside. I was looking for another leg down to 287. Doesn't look like we got that. Obviously, the market has been, impulsively rallying, and really I don't see any change in posture as of right now. So the market's moving higher. Again, on this channel, I covered my short here at this 297 tag and actually went long that day. And then I was looking for some more downside. So I shorted, the other day I shorted just briefly, but covered that. And, I'm not short the indices right now. So in general, it was a good trade capturing this correction. And I was looking for some more, looking for another leg down. We didn't really get it. So as of right now, no trade on triple Qs. The only trade that's really there is we're really close to the all-time highs, which is right there at 330. It's about 337, right in that area. And since we're so close, I think we're likely gonna run up and make a new high. So in the short term, seems like we're gonna make a new high, and that high will be a divergent high. Likely be a divergent high if It will be a divergent high when we make the new high, because you can see the RSI and the PPO will not be making new highs. So if we run up and make a slightly new high, it will be a divergent high. It won't have confirmation until the RSI and the PPO turn down. So I know that can be kind of confusing, but the point I'm trying to make is when we make a new higher price, which we're likely going to do here in Qs, the RSI, if I zoom out, you can see they're trending down. See how they're we're making a lower high in the momentum right there. Now, if we continue up in price, then the momentum continues up. We'll burn through that negative divergence, and it'll look something like that. So to confirm that negative divergence, you'd want to see these start to turn down, and that would be your confirmed negative divergence. Again, I teach all this in my course. In my technical analysis course, link is in the description below, so check that out if you're interested in that. Okay, so Qs, I don't see anything. We're just breaking out, and look, the fangs here. Apple's kind of ramping up, moving higher. Microsoft broke out recently from this area that it was kind of consolidating in, and we're still up there. So just bullish in general on all these fangs. Amazon's kind of breaking out from this downtrend line a little bit. And Google broke out, and it's hanging out. It's hanging out up there. So I don't see anything bearish in these market leaders, and Qs isn't going to sell off with these market leaders rallying. And Microsoft and Apple, I think, makes up 40% of the triple Qs. So if we look at QQQE, that's likely rallying a little bit too. No, actually, that's down. So it's interesting. Qs is up slightly, QQQE's down. So most of the movement today is probably coming down to two stocks, Microsoft and Apple. SPY. So let's look at the SPY. On the hourly, you can see we have this uptrend. We're kind of drifting sideways, kind of grinding higher. We have a divergent high on the daily, so it is not confirmed yet, though. So that's the point I'm trying to make. You can see here we're making higher prices up here than the former highs, and we're on less momentum. See if I can zoom in here. We're making less and less momentum. Here's the momentum. It's still less than the previous momentum highs right in that area, but we're not confirmed. So we want to see these point down or turn down, the RSI turn down and the PPO turn down to confirm this divergence. Once it does that, you will have a confirmed negative divergence, and then what we look for is some sort of a reversal or breakdown in price for our next sell signal. So that's just the setup. I don't see anything yet, and so in general, the market's continuing to kind of grind higher. Kind of on fumes, it's not moving higher by much. It's just kind of grinding higher right now. So keep an eye out for kind of those set, what I'm looking for in terms of a reversal candle and all that. Until you see that, the market can continue to just move higher. So I don't see anything telling me to short right now. And the IWM is not really rallying. It's actually kind of selling off on the daily chart. What I'm looking for, if you go to the hourly, here's kind of the short term that I've got. I've got this thing range bound right now. So support is about 220 and resistance is 225. And I'm looking for a break of one of those levels. If we break up, then IWM's liking going higher. You break down. I think if we break down, I think we're likely heading down to this 206 kind of area. I get that from that's your more major trend line coming off the March 2020 lows. Held support here, held support here, held support here. So 4 reactions. I'm looking for a move down to that. But again, until I see a break of those near-term levels, I'm just waiting and I'm just kind of flat. It's just range bound right now. I want to point out this Lennar one. This is a kind of a perfect level to short at right now. So here's Lennar, and this is a home builder. You've got this bearish rising wedge. I talked about this the last few days. We broke. It wasn't that impulsive of a breakdown though, and I did point that out. We kind of broke, but it just not super impulsive, drifting sideways. And today the buyers have been just buying the thing up, and it's doing a back test basically right here out of this broken trend line. So this is the area where I think it's objective to short at. Doesn't mean it's going to work out. We might have a false breakdown and just pop higher. But again, you want to short at resistance levels and then just manage the trade. If it breaks higher, stop out of your short trade. And if it, continues to sell off, then this is the perfect entry. So it's all about entering trades where your risk is the lowest. And right now it's a very low risk trade because you know where you're wrong. And if you're wrong and it breaks higher, you're wrong small. So that is the name of the game, be wrong small. And so you see on the daily though, this is your bearish rising wedge, and we have big negative divergence right there on the RSI and the PPO. So that tells me that we're likely going to get rejected here, and we're going to break down. First level of support that I see is right down here at 93. And there might be some support maybe right here, but ultimately I think 93 is that we held resistance right in here. We had an impulsive break through that level, and then we held that as support right there. So a couple confirmations around that level. I like that as your first level of support at about 93. Okay, these miners, they continue to work and look good. Just to cover a couple of these, here's BTG. Look at the daily here. You can see there's 2 continued days. We're continuing to kind of break out above this downtrend line right here. And so I've been talking about these miners for a while because they have been the bullish looking charts. They've been bullish. We had bullish divergences building, and we're starting to get breakouts in all of these. So that's continuing to look good. And this trade, I think, from my perspective, is just getting started. I think there's a lot more upside potentially for these things. You look at things like sand. I mean, look at that. That's just perfect. You've got the downtrend channel. You had bullish divergence right down in here, broke to the upside, back tested it, held the support, and off to the races. So clearly in an uptrend on that one. Let's look at some others. This IM Gold, IAG, just kind of still battling with this level right here at resistance. So we're still trying to break out, hasn't broken out yet. You got this downtrend line right here, so waiting for that breakout. Same with WPM, still kind of battling with this downtrend line right there and waiting for that breakout. But so some of these are breaking out and some are right there. So I just want to keep pointing those out because I think, from my perspective, I think these are going to break out and we're going to get a good size move to the upside. Here's HMY. You can see this one already broke out. Here's your downtrend line. Broke out, and we're kind of flagging out right now. They gapped this thing down about 4% today, and the buyers were just there buying it up. Let's look at the hourly. You can see the buyers just stepped right in and bid it up. So we're just kind of flagging out right now. To me, I think this continues higher. Snap here just continues to backtest. So you've got this trend line, uptrend line right there. We had negative divergence right there. So this was a divergent high. And from that divergent high, you've dropped. I mean, even if you shorted here, divergent highs are not a reason to short. I don't short just because a divergent high shows up. It just tells me that we're likely going to see a reversal in price action. And then I look for a break of a trend line support. We did get a break right here, and it was a bull, it was a short-term bull trap. They basically whipped it right back. But this break looks a little more convincing. You've got, more impulsive breakdown. And you can see we're just backtesting that broken trend line right there. So, yeah, they popped it a little bit. But, again, this is not a recovery. This is what they do. When I say they, I'm talking about the market, just market makers and whatnot. But oftentimes, when you look and everyone's looking at a level, they'll run some stops and pop a level. So it's it's just popping above it, but it's not impulsive. It's not an impulsive recovery or anything like that. So I think we're just chopping around here, and we're likely going to get rejected here. Again, if we don't get rejected here and we recover, then you stop out if you're shorting this thing. But this is an objective area right in here to take a short or add to a short position. And really, for a trade down to gap fill is the obvious trade. It's going to take some time. That's a long ways down. I mean, that's this thing will get cut in half from 60 to 30. So clearly, that's going to be pretty bearish if that plays out. And I don't think it's going to happen all at once. I think it's going to happen over time. So that's what I see in that one. And then Roku, I think, looks about the same. Let's take a look at that one. Yeah, so you've got this uptrend line here in Roku. You have bearish divergence right there on both momentum indicators. We have a breakdown, and we're back. We're back testing. This one's kind of, yesterday it closed above it. Today we're above it again. Kind of, we're holding it. So we'll see. I mean, I would expect to get rejected and to sell off. So yeah, that's kind of what I'm watching for on that one. On this one, you could probably just wait to see that rejection. That impulsive breakdown will signal that this was a backtest and we're likely going lower. First level of support is about 236.50 on this one. Okay, let's wrap up with Viacom. Someone asked me to analyze it. So here's what I got on Viacom. March 2020 lows, uptrend line right here. Pretty much a parabolic ramp. Obviously, this thing's been in the news from that Agros or whatever that hedge fund blow up was. So that blow up, this is what I think it did. You can see on the daily chart, we had lots of, we held support. This trend, this trend line was holding support. No negative divergence really that I can see because this thing was, just blew up. And right now we're sitting here at this former support zone. You can see rolling back, we held support all through here, held support through here. And then once we broke down, it was resistance there, and then there's your COVID crash. And zooming in, we're right there at that support area. So, it should hold here in this area. That's potentially a good thing. But it has also broken this uptrend line right here. So, I mean, if there's upside, it could be a back test. We could run up and back test this trend line up around 54 or so. And that would be a move of where we're at, maybe of 20, 30% or so. So still, worth a trade for sure. I would want to see, we could look at the hourly here. Yeah, you've got some bullish divergence as well showing up on the hourly. So yeah, I think here it is right there. See that bullish divergence on the hourly, on the RSI and the PPO? See how those are both turning up? And yet price continues to kind of drift lower like that. So yeah, I actually like this for a back test. I'd want to see it recover this line for this 42. I mean, we're right there. So basically, as long as it holds in this area, this looks like a zone of support, and it could run up and do a back test up to that trend line of, I don't know when it'll actually do it. So, do a back test. So I don't know, where it'll be at, but maybe around this 53 area or so. I do kind of like that. The 200-day is right below, too, though, at 39.42. So we could dip down and hit that 200-day and then bounce from there. But, yeah, it does look like a zone of support, like we're in the area of support. So I do kind of like this as a long trade for a back test. Now, once we got to the back test, I'd probably bail. I wouldn't hold this thing because it has broken its long-term bull trend since 2020. There's your bullish trend, and it broke that. So I think we could back test, but then we're probably going to fail from there. So that's what I got on that one. That's really all I got. I'm going to leave it here. Everyone have a great weekend. And I might do a live stream tomorrow. We'll see how things go. But if I do it, I typically do it around 9 o'clock Pacific time, 12 o'clock Eastern. So thanks, everyone. Catch you on the next one.